So welcome to Good Money Guide. Today we're joined by Richard Danner. He's the CEO and founder of Tembo. Now, Tembo recently acquired NUDE, which won our Best Lifetime ISA in the 2023 award. So we're going to have a chat about Richard, about what Tembo does, why they acquired NUDE, and for those that are new to lifetime ISAs, we're going to answer some commonly asked questions so that you're more comfortable getting involved. So Richard, thanks a lot for joining us.
Great to be here. Thank you.
How are things? You've had a busy day.
Yeah. Busy month. So things are good. So we acquired the business of NUDE at the beginning of February. So we've kind of rebranded it to Tembo Lifetime ISA. So far the first month has been really positive. So it's been good so far.
Okay, and for those that don't know what Tembo does, I mean, obviously you're a mortgage broker. There's a few of you guys in the market, but can you just give us a quick overview of what Tembo does and who you do it for?
Yeah, so we set the company up about 3 years ago, and the idea really was trying to find ways to help people who are struggling with affordability. So we started off really focusing on first-time buyers, but actually, given what's happened in the market over the last couple of years, there's a lot of other people who are struggling with affordability. It's not just first-time buyers. So you kind of have second steppers. You have people now looking to remortgage who are struggling. So the whole concept of our business is we're basically trying to help people who are struggling with affordability. As a result, probably about 80% of our customers have been turned down by a broker or a lender before they come to us. And we basically help look at all the alternative options that are available to them, with a big focus on helping find ways for buyers to get support from family or friends, or from shared ownership or part buy, part rent schemes.
Okay, so it's not because I was listening to or watching rather one of Martin Lewis's programs the other day, and he had some really good information on not gaining the system, but just positioning yourself correctly so that you appeal more to mortgage lenders. That's the sort of thing you do, is it?
Yeah, so there's that. There's a lot of the kind of free brokers out there who kind of they're a volume business, so they'll go to all the high street lenders and they'll try and get you a deal there. But there's actually 110 lenders to choose from, and there's a lot of specialist buying schemes. So if you kind of know about all those kind of options, you might be able to actually find a way to help a customer that might not have otherwise been able to get something. So exactly that. You kind of, there's stuff you can do on your own in terms of getting your kind of ducks in a row. There's like, for example, there's a growing number of specific mortgages for kind of key workers, which increase the amount you can afford. So there's all sorts of different pockets of borrowing that people can tap into. But fundamentally, if we look at last year, half of all first-time buyers last year got support from family or friends. So actually trying to tap in to find alternative ways to get that level of support, we kind of know it's something that already works, and we think it can be really effective.
Great. And just before we get onto lifetime ISAs, which is of course a sort of ultimate boost for first-time buyers. I mean, what do you think is going to happen with the mortgage world? I mean, our mortgage has gone up in percentage terms a ridiculous amount, and
Yeah.
everybody I speak to, because everybody's coming off the 2, 3, even 5-year fixed. Everybody's been on these legacy low interest rates, which have been
Yeah.
brilliant. And now people are going from, 2, 2.5, sometimes below, up to even 5 or 6.
Yeah.
What do you think is going to happen, house price wise and affordability wise?
Well, I think, there's obviously a lot going to happen this year with the election, so you never quite know which way the economy is going to go. But where we currently are, I think the days of the very low base rates, like 0.25, that seems like it's history. The rates seem to be kind of settling around the 4% mark, which actually, if you look at the averages over a long term, like 100 or 150 years, around about 4% is kind of the average rate. So I think there's going to be a bit of a correction as people get used to those higher rates, and the kind of era of cheap mortgages is kind of slightly over. But I think you also need to put that in perspective that there's also been a slight reduction in house prices. So actually, in order to buy the house, people are having to probably get a slightly smaller mortgage because the prices have come down a bit. But I think for people who are remortgaging, it is challenging. But we're finding ways for people to get around that. So for example, you could slightly extend the term to reduce your monthly repayments. You could have a little bit on interest only. There's lots of options for people to do, but it is definitely it's a pain point. But I think we often have a lot of customers coming to us saying, "Oh, nightmare, it's gone up by this amount." I think you kind of have to step away from the drama that you might read in the papers and stuff. And actually, there's often ways to work through these things. So I think not panicking and thinking about it, with a long way ahead, there are actually solutions, and we can help people with that.
Okay, great. Well, let's talk about NUDE and Lifetime ISAs. So you recently acquired them. Obviously, it's quite a good fit. I know. We said when we chatted on the phone we weren't going to mention phrases like vertical integration, but it's it's a very good fit for a mortgage broker, from my point of view. So, why the acquisition? How's it gone?
Yeah, so we have been working with NUDE for about a year, partnering with them, so helping their customers when they want to buy a home. And actually, if you look at kind of the key ingredients of what you need to buy a house, you kind of need an income. So we're probably not going to go into recruitment, but you need a really good income. You need to have a good credit history. So make sure you've built a bit of a credit history. You need to be able to save for a deposit, and as I mentioned before, in half cases, people get support from family. There's a big chunk of people getting support from shared ownership. You kind of need to look at an alternative buying scheme as well. So savings is kind of a really core part of the proposition. And actually, what we find is, whilst there's a lot of low deposit, you can even get a mortgage without a deposit. But there's a lot of 5% products. There's a lot of 10% products. Actually, we really find with our customers, they get the best deals and the best financial benefit when they start to get a kind of 15 or 20% deposit together, because it unlocks lower rates. It means the banks are a little bit less stringent on various, elements of their income. And so we really encourage our buyers where they can to build a bigger deposit. And so obviously, with the Lifetime ISA, that is just an absolute no-brainer if you're a first-time buyer looking to save, because you're basically getting free government money each year as long as you are an eligible customer. So we kind of thought there was a really nice synergy between the two businesses. But also, we build a really strong relationship with our customers and we offer them great service. They're often asking us, where should I save in the run-up to buying a house? And so we kind of had this natural opportunity where customers were asking us. So we were looking around at ways to kind of develop our own Lifetime ISA, whether we were going to white label one or partner with someone. Actually, when we spoke to NUDE, we kind of realised this might be a great opportunity.
Well, I've always liked NUDE. Actually, I rewatched my video review of them before this interview. It's funny, half of those things I don't remember doing, but it's always funny looking back. And actually, it's a great product. So are you? I mean, obviously, you're way up there with the rates. You've got one of the best lifetime ISA rates on the market. Are you making any changes? Are you making any changes to it?
To the rate or to the proposition?
To the rate and the proposition, because they've
Yeah.
got that, you can have some in the stock market, you can have some in cash. Are you just gonna keep it as is and just
Yeah.
integrate it,
So
or have you
basically,
got any grand plans for it?
Yeah, so basically we took over the business, and we're kind of the mantra, I guess, we've got with the mortgage businesses, we want to offer our customers the best value and we want them to have the best customer experience. And kind of we've taken that approach again with the Tembo Lifetime ISA, or the former NUDE business. So the first thing we did was we took away the monthly fee for all new customers. So it's now a free service. You don't have to pay a monthly fee. I think that was restricting quite a lot of customers coming to us, but it also meant that we couldn't then appear in a lot of the comparison tables because it kind of wasn't like for like. So we've made it a free service, and we also increased the rate. We have the highest underlying interest rate by quite a margin. So I think the next one is about 3.51. There's businesses like Moneybox, they have an introductory rate, but that goes after a year, and our rate is 4.3. So we've stuck our rate pretty high up, and we believe that offers great value for our customers. So kind of in terms of the high level stuff, interest rates and the fee. We've also reduced the term. So it used to be a 90-day term. You have to give us 90 days notice to get the money out. We've reduced that to 45 days. And we kind of made it more flexible for the customers. And we've started now to made some changes to the app. So to make it more kind of I guess, a slicker process than it was. So it was already really good, but we kind of made some enhancements to the app.
It was pretty slick before, actually. It was really impressive. Yeah.
Yeah, so bringing in some of the enhancements that we've made
Um,
before. So sorry.
okay. And what's going to happen with your rate when the underlying rate changes? Because obviously, I'm assuming that your profitability is in the spread. What happens when rates go up and go down? Will your rates mirror the underlying
Yeah, I
moves,
think they'll probably mirror. I mean,
or are you
there's a bit
going
of
to stick
flexibility
there?
in the rates, so we'll see. We'll see what happens. But it is a variable rate; it's not a fixed rate for the customers. So we state it's a variable rate. I think we'll see what happens when the rates move. But yeah, I would imagine it will move. But we would like to be kind of price leaders, so we'd like to be top of the rate. So if that means we need to squeeze a bit of margin, we probably would.
Okay. And what are you seeing in terms of what people are investing in? Do you find that house buyers that are struggling with affordability are going for the cash ISA option rather than the stocks and
Yeah,
shares
it's a really good
ISA? Are
question.
they
So
are they very conservative with their money, or are they?
yeah, it's they are overwhelmingly focused on cash. So at the moment,
Yeah,
anyway,
interest rates are so good.
interest
Mm.
rates are good, and if you look at the kind of the track record of the last 4 years of the markets, obviously there's if you pick up the right time, there's been great growth, but overall they've not been that exciting. But also, the kind of time horizon of a buyer, let's say it's between 1 and 5 years. Actually, that's not an ideal time to get invested in the stock market, because you might want to withdraw the money and there might be a loss. So we don't see huge uptake on the stocks and shares. It's probably like less than 10% of customers, of first time buyer customers. But what we do see is, there's actually a growing number of customers, because there's two uses to the Lifetime ISA. One is for first time buyers, but the second is kind of an alternative way to save for retirement. It's not as generally tax efficient as a pension, but we're actually seeing a growing number of people who want to use it for their pension for whatever reason. And those customers,
Good bonus, though, isn't it? Good
exactly,
bonus.
and you
Yeah.
get up to £32,000 a year. So if you're more affluent and you've filled your pension allowance in the year, it's probably the second best savings option after a pension. But those customers who are in it for a longer term, they seem to be more inclined. So probably 50% of those customers would actually invest into stocks and shares. So it's kind of interesting depending on what the customer's using it for, how they would then allocate their money.
Yeah, no, that's real. I would have thought that's about right, actually, because I imagine the worst thing that could ever happen to a house deposit is for it to get lost in the stock market. And some of the stock market's doing incredibly well, which means it's potentially due a significant correction at some point, and that would be that would be catastrophic. So we've got some user-based questions
Yeah.
around lifetime ISAs. We'll do them in a quick fire way, so that we can cover the main points that people might be unsure of about lifetime ISAs. So if you're happy, I'll just
Yeah.
fire away. I'll just
Sounds
fire
good.
away with these questions, and you go ahead. So, what sets your lifetime ISA apart from the other savings accounts out there?
So I guess in terms of the Lifetime ISA, the main thing is you get £1,000 free money each year for every £4,000 you save. So you get £1,000 from the government towards your deposit. In terms of the Tembo Lifetime ISA, we pay the highest underlying interest rate of 4.3%.
Okay. And how do people sign up? Is it still app-based, or can you sign up on the web as well?
So yeah, you can go to the website, but you need to then download the app. So it's app-based, both on Apple and Android. Takes about 5 minutes. So you basically fill in a bit of information around where you are in your home buying journey. You then put in some information so we can validate your identity. You can then connect your bank so we can give you some tips on how to save. And then you set up direct debit, and you can either put an instant payment in, or you can do monthly payments as you wish. And you can then start paying into your account straight away. It normally takes 5-10 minutes to set up an account.
Okay. And I'm just interested. What I see so many companies that are just app only and have their websites almost a splash screen to download the app. Why is that? Because it's too complicated to maintain a website and an app, or are people just not really interested in websites anymore?
No, you're speaking my language, and we will be opening a web There'll be a web portal or web journey as well for our customers in due course. I completely agree. Some people don't want to use an app, so I think there was a bit of a trend. If you think Monzo, for example, it's an app-only product. So there's a lot of businesses that have grown quite focused on the app. But I think you're excluding quite a lot of customers who would want to do it through a website. I completely agree. So we will get a website version of the product. I think in terms of the technical actual requirements, having the app and the website is kind of apparently it's quite complex, but it's definitely something we want to do.
Yeah. Do you think it's because we're old? How old are you?
I'm 41, so yeah, I would I actually
Okay, yeah, I'm 44. So we're
quite
we're
sadly I can't even.
eligible.
Yeah, maybe we're ineligible for lifetime ISAs, but we want to offer other products as well in the future. So I definitely want to be able to download the app. But yeah, I don't know. I think I prefer to do these kind of things on a computer rather than on my phone. I don't know why. It's just the way I do things. But yeah, maybe it is because we're getting a bit old. But actually, that's there's a lot of people
Yeah.
who might want to use the product to save who are in their 40s and 50s. So we want to be able to help them.
Hmm. Oh, and it's such a pain downloading apps as well. I know it's it's a relatively simple, slick process, but I think for just getting started, I find just logging in with a website much easier. And then it was interesting. I was interviewing someone else about their investment platform, and they were saying a lot of research, a lot of sign ups, a lot of decision making is done off the app, but a lot of execution is actually done. So when people come to buying and selling shares, that's mainly done on the app, but none of the research, none of the analysis, and not so much of the signing up. People still
Mhm.
prefer that website for the first point of call.
Interesting.
Okay. So next question. For us lay people, what's the deal with lifetime ISAs? Why should we choose them over regular savings accounts?
I think the main reason, as I mentioned before, is that they've been set up. If you're a first time buyer, they've been set up to help you accelerate the amount you can buy. If you're looking to have an alternative to a retirement a pension, they actually enable you to get again money from the government. So during your lifetime, you can get up to £32,000 in bonuses. So £1,000 for 32 years from the government. It's effectively free money. So that's the kind of the main reason is it's a boosted savings product from the government. But you also can get either interest if you choose to put it in cash and pretty competitive rates, or you can put that money into investments. So it's a savings account like no other really, other than perhaps a little bit like a pension, where you're getting money boosted in from the government, and they're doing that to incentivize saving.
And why shouldn't you get a lifetime ISA? We always talk about the positives, but
Yeah, no,
it's important to talk about the risks and the negatives as well. When is a lifetime ISA inappropriate?
yeah. So the first thing is, as we've slightly touched on, depressingly, just before, you have to be aged between 18 and 39 to open one. We had a guy who, on the eve of his 40th birthday, 1 hour before he was 40, he tried to open an account, and the direct debit didn't go through. So that obviously caused a bit of a problem. You have to be aged between 18
Oh
and
no.
39. And if you want to use it as a retirement fund, you can pay in until you're 50, but you can't pay in after the age of 50. So that's the first thing. You also can't have owned a home before. So if you want to use it for your first time buyer deposit, you have to be a first time buyer. If you're married or if you have a partner, they don't have to, but they can't use a lifetime ISA. But for your money in your lifetime ISA, when you're buying the house, it has to be your first home you've owned. You have to be a UK resident with a national insurance number, and you need to also be looking or intending to buy a house under 450,000. That's the current price cap. So if you're in kind of expensive part of London or the southeast or wherever it might be, and the properties you're thinking of buying are going to be over 450,000, then you will be ineligible. There is obviously the budget coming up this week, and there's rumours that price cap might be increased, but at the moment you need to be looking at houses under 450,000.
Okay. And what about penalties as well? Penalties are a big thing. You do hear stories about that. What's the best way to avoid the potential penalties you get with lifetime
Yeah, because
ISAs?
basically there's three ways you can get the money out, right, without a penalty. So number one is when you're a first time buyer, when you get to buy the house, the money will be sent to your solicitor direct from our account to the solicitor who's doing the conveyancing. That's called an eligible withdrawal. The second one is if you reach the age of 60, you can draw down all the money and use that if you want to for your retirement fund. And the third one is obviously if you die, your executors can get the money out without the having the bonus taken out. If at any other time you decide actually I want to get a couple of £1,000 out of my account because I'm a bit short of money, you will lose your government bonus on that amount, but also you lose an additional bit of your own money. And I think this is the major issue with the Lifetime ISA at the moment. And this is where they're thinking there might be some tweaks to the regulation. Because effectively what happens is the government gives you a 25% bonus, but the way it's calculated is when you take it out, they then take 25% of the money back. And that means because it's 25% of a bigger portion, you end up losing about 6.25% of your own money. So not only are you losing the government bonus, you're actually having to give away a bit of your money too. And that's kind of the bone of contention, which hopefully is going to be solved.
Yeah, I think that's a bit unfair. I mean, it's all very well losing the bonus. I think everybody, everybody will accept that. But I think losing a little bit of your own money as well
Yeah, slightly
is a bit
controversially,
harsh.
but I mean, I do sometimes wonder if it was a kind of someone not that great at maths who was coming up with the rules, who didn't realise like 25% of the bigger number.
I
I
think they
don't
probably
know.
just didn't think about it.
Didn't think about it. No.
Yeah,
It does seem a bit odd.
I suspect it wasn't done. Yeah, I suspect it wasn't done deliberately. I mean, these things are designed to help people. Maybe it was just an oversight. So let's talk about performance as well. On the app, how often is interest paid, and portfolio returns as well? Is there income derived from the stocks and shares ISA as well?
Yeah, so we calculate the interest on a daily basis and we put it into the account on a monthly basis. And that is along with the government bonus if you're eligible for a government bonus that month if you've paid some money in. So that's on the cash side. On the stocks and shares side, we currently have one global tracker fund with BlackRock. Actually performed relatively well the last quarter, I think 12%, so pretty good. That's the fund, and that kind of the value of that gets updated every month too within the app. So that's the kind of I guess the key performance metrics.
Okay. And so there might be some changes coming up in the world of lifetime ISAs.
Yeah.
Do you think people should hold fire, or do you think just get involved as soon as possible?
Well, obviously, it's completely down to the individual's choice. I would say if you're thinking of buying a house under 450,000, it's a bit of a no-brainer if you want the free money. Obviously, if you're worried about your financial resilience and you might need to withdraw money, try and keep some aside outside of the Lifetime ISA so you can dip into that first. But I think that the changes primarily that have been touted will be removing that kind of penalty, that 6.25 personal penalty will go. So it would just be the money you've got from the government when you give back. That's the first thing. And secondly, potentially increasing the upper cap, because that was set about 5 or 6 years ago, and so obviously house prices have gone up and it hasn't really kept up. So those would be the two things. So I think they're good amendments, but I don't think it should necessarily stop people from getting one now.
So we got two more questions. This is an important one. Lifetime ISAs are great, but let's talk about security and safety. So
yeah,
what happens if you go bust? What happens if somebody invests their hard-earned money in a lifetime ISA and then you as a business fail? What protection do investors and savers have?
Yeah, so hopefully we wouldn't fail. We've got some great backers. We're 20% owned by Aviva, and we've got a really, our core mortgage business is profitable. So, the business is going really well. But obviously, we are a relatively young company, so there is that risk. So we actually place our money on the cash side with major banks. So, for example, with Barclays, and that money is covered by the FSCS scheme. So that means that the first £85,000 that you have with any particular deposit taker, with any particular bank, is covered by the government guarantee. So if we were to go bust, that guarantee would then kick in. And similarly, if Barclays was to go bust as well, that 85 grand would kick in. So if you have under 85,000, your money is kind of pretty much effectively guaranteed by government. So that's the kind of one type of security, I guess. Similar thing mirrors in stocks and shares as well. But I think the other thing is around the kind of, I guess, the fraud and security risk within the app. We have banking level security. We actually partner with a lot of banks and big financial institutions in terms of using our product. So we've kind of got really, really rigorous security. But the second thing that's kind of quite a good feature is there's only really two places where the money can go. So if you're a first time buyer, the money would be paid to a conveyancer. So we would check that it was a registered solicitor and we would send the money to them, obviously with your approval. But if you want a withdrawal, the only place the money can go is back to the current account from which it's been paid from. So we can't really be defrauded. We've had no fraud cases because someone can't ring up and get money out of your account. It can only get back to the account from which you've paid into it, which kind of is a really strong, I guess, security feature of our product.
You mentioned actually earlier, one of the things you focus on is sort of affordability and things like that. When you're sending money to the conveyances and the solicitors, do you give the Lifetime ISA a quick scan before it's sent out to help people potentially avoid unwitting penalties? So if they've asked for the money and they're accidentally buying a house for 500,000 instead of 450, as an example, do you have a sort of withdrawal checklist that people can go through?
Yeah, so that would all go through our
money's
advice process.
sent out?
So we have obviously our mortgage advisors would go through all that in the advice process. But also, if there's anything fell through the gaps, the customers all get a named case manager that takes them all the way from when they first contact the mortgage team right through to completion. And so all those kind of things, if there was an issue, it would be picked up during that process. Yeah, so we would never let that kind of issue arise.
Okay, because I think that was always one of the pain points with lifetime ISAs. It's great that you're handling both parts of the process, because I think people got unstuck with that before. But let's end on a high. So one final question, sort of anecdotally, because obviously you guys speak to your customers. You're not just an online business. Do you have any nice anecdotes or success stories that that you're personally aware of as a founder that you've been quite proud of
Yeah,
for your
so
business?
because we worked with the NUDE business before, we actually have quite a lot of customers that have saved and then they've gone on to get a mortgage. And I think for us, what's really good is when you go onto the ISA app, it kind of gives you this estimated time to buy. And often that can be quite scary. It can be quite long, like 8 or 9 years.
Terrifying, yeah.
What we really like is actually how can we find ways to accelerate that? And we had a customer a few weeks ago who'd come on about, I think they'd come onto the app at the beginning of 22, and they'd seen, I think it was saying about 7 years to buy. So they'd started saving in the Lifetime ISA app. I think they transferred a bit of their Help to Buy ISA in as well, and they'd saved about 15 or 20,000. It was still saying where they wanted to buy; they were like 4 years away, and then they went through into the mortgage journey, and we actually were able to arrange them what we call an income boost product. So it was a guy, and he actually ended up buying a property with his sister. His sister wasn't on the deeds of the property, but she could increase his affordability while he kind of got himself established. And effectively, over the period of 18 months, his buying time went from, I think, 7 years, and he bought a house in 18 months. So I think the issue with home ownership is like there's this major affordability gap. People kind of think it's just not for me. I'm not going to be able to do it. But actually, if you get into it and start working on it, there are often ways that people don't even know about that can mean they can buy a home sooner.
I think that's a really powerful feature, actually. The slider. It was one of the things we really liked about Nude, because people are so put off by the scale of the task, but if you can show them visibly that actually, if you invest this way, or if you save this way, we can reduce it from 7 to 2, or from 5 to 3. I think it's a really strong message. Some of the robo advisors, the automated investing platforms, do a great job of that as well, of showing you how your money can grow in the long term. And I think giving people that visualization is really important. Well, I think that's a really good overview of lifetime ISAs there. I think, and I hope that we've helped people understand them a little bit better. Anything else you want to add on to the end? Any other features that from Tembo that we haven't covered that you think are worth mentioning?
Um, no, I think what we find, and one of the biggest, we touched on it already talking about stocks and shares, but there's a big gap in people's understanding of finances, and by its very nature, a first-time buyer has never been through this journey before, and there's so many elements of things that you need to kind of be wary of that people have no idea about. So you've firstly got to navigate the wild world of estate agents and Rightmove and house pricing. You then got to there's all these different buying schemes being bounced around like shared ownership and stuff. You've then got all these saving schemes. Should I do a lifetime ISA? Should I put it in ISA, stocks and shares ISA? All this stuff going on, and that's before you've even got anywhere near a mortgage. And so I think what we find is we kind of need to really break things down in a really systematic way to help kind of educate people around their options, and build trust with them. And I think that's kind of really what we're trying to do, is help people who are starting out going, look, I don't want to be paying money to my landlord anymore, or I'm 30 years old, I really don't want to be living with my parents anymore. I want to try and find a way to get my own place. It shouldn't be that hard. And we're trying to lay out the kind of a pathway to people doing that in their lifetimes in a really simple way. And so that's kind of what we're about. So yeah, that's kind of the mission of what we're trying to do, is help people to buy a home sooner.
Well, I think anything that makes the process of buying a house smoother is well worth getting involved in. It's both the best thing and the worst thing in the world, buying a new house. When we bought our current house, the guys that did our mortgage were just unbelievably hopeless. They managed to get the wrong address, the wrong amount, and unwittingly cancel it the day before we were due to exchange. I remember being so stressed about it that I was in the office on my own, and I was so stressed that I was like, I'm going to have the door open so that if I have a heart attack after dealing with this, someone will find me. I can't. I moved my chair in front of the door so that people walking past in the corridor would be able to see me slumped on the floor after dealing
Oh,
with
no.
dealing with the process of buying a house. It's terrible.
Well, you're a financial expert, so if that's what's happened to you, imagine what it's like to someone who literally has no idea about money. It is quite scary that these kind of things happen. But I think exactly what you said is so true. Like it is a nightmare for a lot of people, and we're just trying to bring. It's always going to be a little bit stressful, but we're trying to kind of alleviate some of that stress.
Great, great. Well, Richard, look, thank you very much for talking to us. We're looking forward to following your journey with NUDE Lifetime ISAs, and we'll get you involved in the site one way or another, and catch up soon.
Yeah, well, thanks very much for having me.